Hey there, my name is Rob Lamb and welcome to my channel. My channel talks about investing, financial independence, success, mindset, making money on your side, whether you're working a full-time job or a part-time job. In this video, I wanted to talk to you about a very powerful strategy on how you can use your IRA to buy properties and invest in real estate. And the profits are then tax-free so that you can supercharge your retirement. I bought a property last year, literally for free. And I talked about this in another video of mine, which I have a link to above, right there, and in the description below. I highly recommend you review that video if you want more details. But that property generated about $70,000 of tax-free profits for me in an IRA that I only had a few $1,000s in. Talk about supercharging the IRA. If that interests you and you would like to learn more about what self-directed IRA is, then I highly recommend that you stay tuned. There are many self-directed IRAs out there. In fact, if you do a search on Google about self-directed IRAs, you'll see that there's a ton of them. Not just any IRA will allow you to invest in real estate. You have to choose one that administers non-traditional assets such as real estate. This is not the same IRA that you use for investing in mutual funds. Those are the IRAs known as traditional and Roth IRAs that are actually managed by a fund company like Vanguard or Fidelity. What I did is that I moved a few $1,000s from my Merrill Lynch Roth IRA in order to establish this IRA account for the purchase of buying the house that I had in mind. And that was all the money to pay closing costs, which was all that was needed to acquire that $300,000 property. One of the most powerful and popular self-directed IRAs for real estate investors is actually Equity Trust. I have a link to them below if you'd like to check it out. But the company I chose is NewView. And I chose them because I like their fees better for what I was looking to do, which was just getting started with all of this. And I'm glad that I did, because this was good for me as I started out and the fees were low. Also, they were understanding of the certain technique that I was doing, which was subject to the existing financing. So I carefully chose that company and technique, but I would have picked either NewView or Equity Trust. And you want to make sure that the technique that you want to implement will suit that IRAs. All right. Every year, you can contribute to this IRA instead of your other IRA accounts in order to grow this funding to use for real estate. Anyway, I wanted to jump now into the 8 different principles and considerations when investing in a real estate with your IRA. The first principle that you need to know is that your IRA cannot purchase property owned by you or a disqualified person. What this means is that you can't have the IRA purchase a property that you own or by members of your family. IRS regulations don't allow transactions that are considered self-dealing, and they don't allow your self-directed IRA to buy property or sell property to any disqualified person, including yourself, certain family members, and others. This means people who are your descendants or your spouse or of lineal descent, it won't be allowed. When I bought the property that I had put under my IRA as the buyer, they had to sign by an authorized person at the company, because the ownership cannot be under my name or my entity. That's why I couldn't sign it. The second principle I wanted to share with you is that you cannot have indirect benefits from the property owned by the IRA. This means you cannot have a vacation home for yourself that you use periodically. You can't rent from your IRA, for example. It's not intended to benefit you today in any way. It's meant for future purposes, right? Like for retirement. This is known as having an indirect benefit. There can't be any of those indirect benefits. The property that I bought had tenants already in it, and I made sure that they actually paid the IRA, the rent, directly, because I can't collect for myself and it couldn't go to my account, so it went straight to them. The third principle is that IRA investments are uniquely titled. The way that the IRA contains a title must be the name of the IRA, not under your own name or your company. For example, my IRA had a name like this: NewView Trust Co. custodian, Robert Lamb, pound, and then the account number. Therefore, any documents, invoices, bills, payments, etc. must be made out to that name. When it buys or sells a piece of real estate, that has to be the name that's on the contract. It must be signed by an authorized person within the IRA company, not you. Sometimes it could be like a day or two to get some of these documents signed. So make sure that when you're doing some of your transactions, that you leave yourself time to do all this paperwork going back and forth, because you're dealing with a third party, right? When I was closing on the property, I had to get various amendments signed and various disclosures signed, and it could take like a day here and there to do this, so just keep that in mind. One thing you'll notice is that the name is incredibly long. It looks a little funny in the county records, but that's just the way it is, and that's how, you know, they wanted it to be called and set up. You could get around this if you were to put the property under a land trust instead, and then make the IRA just a beneficiary of that land trust. That's a more complicated topic than this video. It's good for security, so no one really knows who's behind all of this. So land trust is great to use. The fourth principle I wanted to talk about with an IRA is that the real estate in an IRA can be purchased without 100% funding from your IRA. You can purchase property in more ways than just an outright purchase of the full amount from your account. These other options include undivided interest and partnering with others, including other account holders, right? Did you hear that? It's really powerful. You can partner with other people who have IRAs or who have a non-IRA account and work on an investment together. You can also finance an investment with your IRA, but it has to be structured properly. I did want to take this moment and actually ask you a question. Do you have money in your IRA that you'd like to do something like this with and have it generate income for you that's backed securely by real estate? If so, let's talk. I can work with you and help you in owning real estate or making profits from real estate without you actually being deeply involved in the day-to-day activities. You can also use your funds in addition with mine, and we can grow the money together. Let me know in the comments if you'd be interested, and I'd love to have a chat with you. Number 5, the fifth principle is that your IRA investments that use financing must pay UBIT. That's a UBIT tax. If the loan is a non-recourse, your self-directed IRA can buy real estate with financing. UBIT stands for Unrelated Business Income Tax, and it applies if you are using financing or a loan. When I purchased the property with my IRA, I basically took over the payments from the seller, so I didn't actually have the loan under the IRA's name. That's why I didn't need to put any money down or get any kind of loan. This is a super powerful way to buy properties, which is what I mentioned in that video earlier. And as I mentioned, you'll find that video in the comments. So make sure you check that video out if you haven't seen it yet. Number 6 principle is that the expenses must be paid from your IRA. Maintenance, upgrades, property taxes, condo association fees, general bills, and other expenses related to an investment property owned by our self-directed IRA must be paid from your IRA. This can be accomplished by making a request for funds from your IRA custodian. When I bought the house with my IRA, all I did is I put $10 to the seller as option consideration. That $10 was written out by the IRA. When I had the house inspected, I wrote a check from the IRA to send to the inspection company. Also, any homeowner association fees had to be paid out by the IRA. You can set up a checkbook control, is what they call it, with the company, so that you can literally just write checks from the IRA. So that makes it really convenient. To set this up, you have to follow their exact steps on what to do in order to have this kind of flexibility. Number 7, the real estate IRA income must return back to your IRA. All rental or other revenue generated by the property must go back to the IRA and repaid to the custodian, which is then deposited into your account. It is still your account. It's just that it has to flow into the IRA and not to you personally, obviously. I talked about this a little bit earlier. So any income generated has to come back to the company, as like rent, profits from the sale. But what's powerful is that all of that money is tax-free. Finally, number 8, I want you to understand the fees that are being charged by the IRA. That's important. When I was evaluating the various self-directed IRA companies, I asked questions about their fee structures. I want to stress this point about knowing your fees and keeping an eye on them, because several times I noticed that there were some mistakes that were made. I mean, they're human too, right? That I was actually charged the wrong amount. Another time I noticed that one of the rent payments that came in actually didn't get credited to my account, and it was some kind of oversight. So make sure that, like any checking account of whatever, that you monitor it closely and you know what fees are being charged and that they're being charged at the right time and stuff like that. Anyway, this concludes the video about self-directed IRAs. Let me know what you think in the comments below. Do you think this was helpful? Is this something you would like to do with your IRA? Would you like to work with me on using your IRA to make some more money and tax-free? Let me know in the comments below. Email me if you enjoy the content. Press the like button and subscribe so I can continue to support the channel and provide more videos like this in the future. My goal here is to touch some lives with some of my experiences. Check out my other videos below and in the description below. And happy success to you and happy investing. All right? God bless.